Let's welcome on board Punita Kumar Sinha and talk about what she's making of the world markets right now. Punita, hi, good to have you. Neeti now, as always. One can't really predict which way Trump is going to go, but tariffs, it seems like, are a reality. How do you think the world is going to, at large, deal with that? And I'm going to keep India aside right now. Tell me about how you think the developed markets, US, Japan, and Europe, are going to react to it.
Well, we've seen already a reaction in US, Europe, Japan, China. All the countries are reacting negatively because it's creating a lot of uncertainty as to what it means for their trade deficits or surpluses, what it means for their economies, and what does it mean for their currencies, interest rates, jobs. So there's a trickle down impact of these tariffs that will have multi-layered impact. So there's a lot of uncertainty, and unfortunately, we coming at it after 2 years of very strong markets. So because the markets were
Oh, we seem to have snapped that line. Just going to get back to Punita in just a second. Let's just revisit what the market has been up to. And like we said, don't go by the index. The individual constituents are a lot different. Look at Reliance, for instance. That's staged a meaningful rebound, about a 3.25% higher right now. But on the other hand, some of the banking heavyweights, they continue to reel under pressure, as is the case with some of the IT plays as well. Good move actually on Reliance. And Naresh, let's just revisit the charts because Reliance as well was quite a bit battered. But again, in the last three trading sessions, we've seen a good amount of recovery kick in.
So very interesting price move. Finally, that 1220 mark, which was a support, got taken out. We did not see sharp selling. And now we've seen a sharp recovery in three sessions and we are back to almost a 1 month high. Recent swing high is 1240. So it takes it back into the range wherein we go back to 1300, 1330 levels. And then that becomes the major resistance. So we could be forming a new range between 1200, 1220 to 1330 again.
Okay, Punita is back with us. Punita, we completely lost you within just a few seconds. But yeah, you were telling us how you think the developed markets are going to perhaps continue to stage this shake-off that they have seen ever since, the tariff talks have become real.
So I think there's going to be a lot of volatility this year, and this isn't the end of all of this uncertainty. There is going to be a lot more uncertainty throughout the year until we reach some equilibrium. So I think the economies are all going to face some uncertainties because the tariff increases are going to impact the trade deficits of various countries or trade surpluses if there are. It's going to impact their currencies. It's going to have impact on their own manufacturing sectors because if their products are more expensive, let's say, for instance, in China, they're not able to export at the same prices and they're not competitive. It'll impact jobs in their countries, and this will have quite a big impact across economies, geographies, and also it'll lead to some geopolitical, equations changing.
Good to be speaking with you. Punita, would give us a sense you're getting on India because we have our share bit of a correction on a YTT basis. We have been underperformers. But what's the view coming in now, given the double-digit decline that we have seen and even sharper corrections in the broader markets? Do you believe that the valuations are way more attractive right now and good time to go ahead and pitch in some money? Or rather, there could be some more correction in store?
Well, the valuations are more attractive now than they were. There's no doubt. But are they cheap? No. I mean, we are back to our 20-year or 10-year average valuations on multiples. So at least it's not frothy, but it's not cheap. It's not at the point where, people will run from various countries to say, oh, wow, India is really cheap. But yes, markets are oversold. So could there be rallies? Yes, there could be short-term rallies, short-lived rallies until the new news flow comes and impacts and gives us a shock. So I expect a volatile year. But longer term, of course, we have an inherent strength in our economy, a momentum that is built up from our own consumption demand that is coming from our demographics. And that will keep us, cushioned from significant downsides. But yes, I think that domestic flows have also become weak. foreign flows haven't come in. So all of that needs to change. Domestic investors have to come back in a big way. Foreign investors have to come back in a big way. And I don't see this year being a very predictable year.
Right. Oh yeah, absolutely. Too many moving parts there. But Punita, what will make the foreign investor come back? Because the FIIs and FPIs have eluded India for over a year now, so you can't really link it to only Trump, right?
Yeah, you can't because it was valuations, right? And then China getting its act together, and therefore the valuations in China and money shifting to China. Even if you look at right now, a lot of strategists and funds have been shifting money from India to China, and China, the trade has just begun. So there is more. The expectation is that at the current valuations, there's a lot more, could be a lot more upside. Now, what could also tilt back in India's favor is if the Trump tariffs and the China-US relationship deteriorates further, and the impact on China's companies and earnings are far more negative than anticipated, then yes, money would flow back from China to India. But at the moment, I think people think that there's enough cushion in China, and therefore there is still more money likely to go there.
Punita, let's talk sectors then, because even if it's a volatile time, investors would like to put in some money, and the consensus call for now is coming in on financials. But other than that, is there, firstly, help us with your take on the financials at this point in time, and other than that, any other sector to look into?
Well, financials, evaluation cushion and valuation support has been there because they've not really been outperformers in the last 2 years. So, and I still think financial is a good space to be in. The growth rates are still strong, but we have seen some regulatory tightening that has caused some pressure on the NBFCs and the fintech sector. But valuations are reasonable, and the growth in the Indian economy will generally drive the sector to positive growth. So I think that's a good space to be in. But be selective, of course. In terms of, I still believe that this year you have to be conservative, which means you have to focus on your the sectors that are not going to be as impacted by trade and geopolitics, which means focus on what India is good at and what Indians are good at. So focus on consumption, domestic led, consumption stories, anything that is not, for instance, I think larger caps are safer than smaller caps. So, wherever you think valuation cushion is there and you have a supportive growth environment, which is insulated largely from global trade.
Right. Punita, so good chatting with you. Thank you as always for your time and your thoughts.
Thank you.
Thanks.
Happy Women's Day.
Oh, yes, to you too. Today and every day.
Thank you. Bye.